Hello and good morning. After a very warm festive holiday in India, this is Shikhar Garg, your host for Almas Market Mornings, your daily dose of financial updates. And in today's update, we see the markets heading into one of the very noteworthy days as the central bank for US comes up with, or the market participants expect the central bank of US to come up with the biggest rate hikes in almost 2 decades, which is a 50 basis hike that the market expects. Apart from that, we had a very busy session on the backdrop of these rate hike expectations, while the Australian central bank raised their rates and Chinese economy is still under a bit of a stress. So the rupee traders, for that matter, will have to watch because the yields on US dollar index as well as the yuan all are moving, which tend to be a bit of influential indicators for the current rupee. So, JK, what do you think with all these factors at play? What is that we are expecting out of markets?
Good morning and back to the market after a day's holiday. So I think investors are now actually sitting on their hands, waiting for the Fed decision. Stock markets have been moving in a narrow range now after the big swings last week, responding to the various corporate earning reports. Though very clear that everybody has discounted a 0.5% hike by the Fed tonight, and also starting of the balance sheet reduction. More important would be what Powell says in his press conference, and whether he gives more importance to inflation still than the growth, because the growth picture has started to muddle a bit. GDP first estimate of the Q1 contracted by 1.4%, and manufacturing PMI again came below expectations. So these are some clear, indications that economy is actually reacting to tightening financial conditions. At the same time, the job market continues to be good. The JOLTS job openings data was once again a record high, with more demand for workers and wage inflation being high. So it's only a question whether Powell will sound less hawkish than market is prepared for. If he does, we might see a relief rally in the stocks, and I would only call it as a correction, because Nasdaq is already into the bearish territory, and most of the other markets technically are looking to head for more losses. So that is the expectation from Powell. About other central banks, yesterday Australia actually surprised the market by hiking rate by 0.25% versus 0.15% expected. And this helped Aussie dollar to rally by about 1%. More so, the Australian central bank has stated that there may be need for more rate hikes to bring the inflation back into their targeted level. We also have a Bank of England meeting tomorrow, and another rate hike is expected by them. But Canada also started talking about more rate hikes needed to rein in the inflation. But none of these central bank statements are helping their currencies to rally or sustain the rallies in an environment where dollar is the most sought after currency, safe haven, higher yield, and relatively better growth picture. So that's the overall picture on the dollar. Of course, we did have a relief rally in the yuan also yesterday after failing to break 6.7. And this was subsequent to a 6.5% rally in the USD yuan in the last 1 month. And why not? Such a big move always calls for profit taking ahead of a big event like FOMC, and possibly some fears about Chinese authorities getting in more measures to avoid a free fall in the yuan. About the other dollar pairs, EM markets are still looking to be somewhat weak, and because the US increasing yield differential with the US will play its part, and we might see more outflows continuing from the EMs after a pause, maybe if Fed sounds a bit dovish. On the Indian side, the rupee, obviously nothing much to say right now because the market has been ranging, but the ranges are getting narrower, and we are in for possibly a larger move once this range of either 76.20 or 76.85 breaks. But we did have some indications on the macro when trade deficit number for April was announced. Once again we have a $20 billion deficit for India. Although exports increased by 24.2%, it was more than offset by increase in imports of 26.6%, and basically the rise in commodity prices adding to the higher import picture, and deficit also increasing. So if oil remains above 100, just to give you a perspective, India's trade deficit is more likely to be about 250 billion, and that would be meaning that our current account deficit will also be about 2.5%. We'll have to wait and see if we do have the flows from FDIs and FIIs in the financial year to make up for the large current account and possible BOP deficit also. So that's a picture about the rupee. We still wait for the picture on the FOMC decision, after which we might see some relief rally in the rupee also, because LIC IPO flows are ongoing. In the LIC IPO anchor book, actually, FPIs have put in much lesser of 1,624 crores, whereas 71% of the book has been subscribed by domestic mutual funds. So that is slightly disappointing as far as the foreign exchange flows are concerned, but it is now opening for the general subscription. So we'll see how the things pan out and how the issue performs, because for the government, this is a very important event in their economic program. So that's it. So we look forward to a very rangy, perhaps a boring day ahead of the big event. So, but we'll make it up for that tomorrow. Thank you.
Okay, so what do we hear is we can have a small or a narrow range day today, but brace for some more volatility in the coming days. And as JK mentioned, the trade deficit can be a bit of a worrisome factor, but if we have to talk more on the macro side, we are coming up with another session wherein we are talking with one of the experts or who's who of finance in coming days. So stay tuned, and we'll be releasing that video soon for a more detailed macro update along with the daily market mornings. So that's it for today, guys. Thank you so much for joining.